There's lots of reasons cannabis businesses fail. Some of them are due to poor management, not being in the right place or a niche, or sometimes just plain dumb luck. And while these circumstances are frustrating, a lot of times they're unavoidable. At the same time, there are common themes I see from failed cannabis businesses that come up time and time again and really don't have much to do with management style or with luck. The good news is once these issues are identified, they're straightforward to address, and doing so can put you and your company on the path to success. So today, I'm going to talk about the 3 most common reasons why cannabis businesses fail. And I'll give you the tips to fix each of them to improve your chances of creating a sustainable business that lasts for the long haul. So let's get into it. Hi folks, Chip Schweiger, the Greenleaf CPA, and I help cannabis entrepreneurs build and grow exceptional businesses. Welcome to Ask the Greenleaf CPA. So today I'm going to talk about a really important topic for virtually every cannabis business, and that's the question of why cannabis businesses fail. Yep, you heard me right. We're going to talk about the 3 most common reasons why a cannabis business will fail and how to fix each of them. And our number 1 reason is actually the most common, and that's running out of money. Seems obvious on the surface, right? Well, we've all heard the adage of cash is king, which is absolutely true. But to put a finer point on it, I've seen businesses that have profitability, but no cash flow, and they've quickly been out of business. And if you have adequate cash flow, even without profitability, you can last virtually forever. So cash flow really is that important. Hey, if you're new to this channel, go ahead and hit the subscribe button and click the bell so that you'll always be the first to get my tips and tricks. So how do cannabis companies get themselves into a cash crunch? Well, there's actually 3 reasons. Now, the most common way is because they have no cash flow projections or cash budget. While many businesses plan for revenues and profits, a lot of times they don't do a great job of assuring sufficient cash flow. A cash flow statement completes the income statement and balance sheet as the 3 essential financial management tools for any business. And every business should have a comprehensive cash flow budget that defines how much cash will be available from financing sources and operations, how much will be needed for operations, and how much will be required for non-income statement activities such as expansion and infrastructure and investments in inventory and investments in longer-term assets. The business should also understand the sources and uses of cash and the levers to improve cash flow, such as decreasing the days it takes to collect receivables, increasing the time it takes to pay bills, improving financing sources and terms, and eliminating unnecessary and unprofitable cash outlays. At the same time, business owners should challenge these assumptions because most businesses tend to severely underestimate how much cash flows out of the business and how long it takes to recover that cash. Now, a second issue we see in the cash flow challenge of having enough money to continue to run is being a rapidly growing business. Now, we've talked before about the value of growth, but that needs to be sustainable growth. Rapidly growing cannabis businesses are much more likely than slower growth companies to run out of cash. Cash flow needs increase with growth rates. That's because your business needs to hire new people, increase marketing, invest in production capability if you're a processor, for example, order more inventory, and make other expenditures to keep up with demand. The smart cannabis business owners out there will slow growth slightly, if required, to balance capacity, cash flow, and demand. And the third place where you're likely to see a cash crunch issues is with early stage companies, with startups. Why? Well, often they receive only partial funding from investors who will provide more cash pending certain milestones. At the same time, most entrepreneurs underestimate the time to cash flow and the cash flow required in the business by as much as 100 to 200%. Owners of early stage companies really need to be skilled at finding sources of cash and in projecting cash flow accurately. Now, if you want to fix this, be sure to budget cash flow and have continuous conversations about the status of your current cash flow, the projected needs, any anticipated cash outlays that may be required, ways to generate additional cash, and ongoing targets. Second, secure sources of cash well before the cash is needed. Cash comes much less expensively and freely when you don't need it. Once a cannabis business owner needs cash, he or she either has to pay a premium or finds that the business metrics just don't support an investment or a loan. And as hard as lending is in our industry, without safe banking, it makes sense to only have to do it once. There's a saying I learned a long time ago that is, if you gotta eat a shit sandwich, don't nibble. Third, put controls in place to avoid unnecessary uses of cash. The most successful entrepreneurs treat loose change as it weighs as much as a manhole cover. The business is much more likely to conserve cash if strict controls, including on the CEO, are in place to avoid missing your cash flow plan. For instance, have a clear agreement that expenditures over a certain limit must be discussed by an entire board or the entire leadership team. Finally, have someone on your team, either an outsourced CFO or a controller, who can hold the leadership team accountable for managing cash and providing a much needed objective look at when exceptions to the cash flow budget are appropriate and when they're not. And this is so important for the survival of your cannabis business that you're going to want to check out my video on how you can get more cash flow for your cannabis business. Right up there. The bottom line is, if you intend to stay in business, do not run out of cash or sources of financing. Okay, the second reason cannabis businesses go out of business is failing tax and regulatory compliance. When it comes to cannabis record keeping, not every owner wants to spend the fees on an accountant specific to this niche. And that's what happened to one dispensary owner in Colorado who now owes $391,000 in tax deficiencies and an additional $78,000 in accuracy-related penalties. But how did this happen? Well, according to the notice of deficiency for tax years 2010 and 2011, the IRS found poor record keeping and lack of check registers and no physical inventory counts and inappropriate reduction of cost of goods sold, and the denial of ordinary and necessary business expenses were more than enough to penalize the dispensary. And the tax court upheld the imposition of a 20% tax penalty on the taxpayer for underpayment of the tax liability resulting from the deductions taken. Now, various medical and recreational marijuana practices have been legalized in most states. However, the last major hurdle, the Section 280E prohibition that still keeps marijuana ultimately classified as a Schedule I controlled substance under federal law. And so our industry is very risky. And I've said it before, with all the systemic risk in the cannabis industry, there's absolutely no reason to bring any more risk by getting on the wrong side of compliance rules. Not convinced yet? Well, another example is Sweetleaf. So Sweetleaf was a dispensary chain in a 2019 case. One of the most litigious cannabis court cases I've ever seen. This was a situation where the three owners and a grower that were involved with the chain were knowingly violating the law. Although the vast majority of cannabis owners and accountants try their best to abide by 280E and stay compliant with federal regulations, this case is just to show that the states are involved, and when they are, they don't mess around. So these four had serious compliant issues, at the heart of which was a looping scheme, which is when a customer buys the maximum amount of marijuana multiple times throughout the course of a day. The prosecutor on the case, Kenneth Boyd, actually said his team discovered that some of the customers were doing this up to 40 times a day, leading to nearly 2.5 tons of marijuana moving into the black market. Now, the two executives were each slapped with a year in jail. All 26 dispensaries were shut down, and all licenses were revoked for 15 years. And this case is a prime example of owners simply intending to break the law. A different case called Harborside. So Harborside Health Center was one of California's largest dispensaries. They got in trouble with the IRS when they tried to circumvent 280E by claiming tax deductions through their non-cannabis entity that supposedly sold various other products and services. So the IRS audited years 07 to 2012 of their financials, but really didn't reach an opinion until the end of 2018. And the biggest takeaway from Harborside was determining whether it was a single business or multiple separate entities, and how did this hold up in the face of 280E. So as the court held before, it's allowable to deduct many of the expenses normally not allowed under 280E if one of the businesses is not involved in touching the plant. Now, one of the biggest requirements for a non-trafficking business, though, is that the activity must be conducted regularly and consistently. It must stand on its own, and it must fully have the intent of making its own profit. The courts have determined that a single legal entity can operate more than one business based on these requirements. Now, you can also have multiple legal entities that can be viewed as a single trader business if they're aligned with the same profit motive. So to this end, form over structure will be held up in court. The important thing to note is how the operations function as a unified business, rather than just how your entities are legally structured. With Harborside, less than 1% of the total revenues were attached to the non-cannabis activities, proving that they really didn't meet the court's requirements for multiple entities. Now, upon further inspection, the court found that there were no separate books, no separate entities, no management, or no capital for the non-marijuana sales, despite Harborside claiming that they sold non-cannabis merchandise and therapeutic services and brand development. The tax bill and penalties for this one is upwards of $11 million. Yep, that's right, $11 million. Want to avoid all of these, what we'll call unpleasantries? Well, make sure your compliance team knows this industry and understands where you should never mess around. And as we mentioned before, make sure that the advice you're receiving from advisors who truly know this industry. Not any lawyer or accountant will do. They've got to understand our industry and the unique things about it. And finally, the third common reason cannabis businesses fail is not adjusting to market demands. And look, anytime we talk about market demands, we've got to look at Blockbuster, which, as a reminder, I'm not even sure if they're still in business, is a former provider of movies and video game rental services. At its peak, Blockbuster employed 84,000 people worldwide and had over 9,000 outlets. Now, the quantity and varieties of titles meant that they were head and shoulders above most other video rental stores. But the rise of Netflix and on-demand streaming meant that Blockbuster's business model needed to change. But unfortunately, it didn't. Blockbuster didn't change with the times by adopting a trend which would ultimately prove to be its downfall. And MySpace is another example of what happens when a company fails to adjust to market trends. Now, personally, I was never a massive fan of MySpace, but I can see why people were. MySpace was the largest social networking site in the world between 2004 and 2009, surpassing Google in 2006 as the most visited website in America. Many musicians found fame on MySpace, including Arctic Monkeys and Sean Kingston and Lily Allen. But the Facebook climbed into the ring with a better user experience and with the ability to help people connect through more than just music. Now, with Facebook, users were able to connect with friends, both current and past, through hobbies and interests in common, something which has contributed to them now becoming a social networking giant with over 2 billion monthly active users. So how can you avoid the same or similar fate as Blockbuster or MySpace with your cannabis business? Well, keep an eye on where the industry is headed and likely to be headed in the near and intermediate future, and then be nimble enough to adjust and adapt. So you might look to how shipping and distribution interruptions will continue to plague the cannabis industry regarding supplies such as vape cartridges and the many ancillary products produced in foreign countries, and then come up with a strategy to mitigate those impacts. We hear a lot of talk about the trend towards craft cannabis, so I would also look there, as well as the opening of consumption lounges, which is likely to have a big impact across the industry as they get up and running. So for the dispensary owners, I would look at what kinds of immersive experiences you can create to keep people in your dispensary. The longer they stay inside your doors, the more they buy. That's a fact. And even bigger is the positive impacts that can come from the trend towards brand building. Whether it's a line of flower or branded dispensary experiences, or more significant investments into broader brand marketing, we're going to likely see brands gaining ground to own the relationship with the consumer moving forward. As the saying goes, if you always do what you've always done, you're always going to get what you've always gotten. Great if things are going in your way, but once the market changes, you could be caught flat-footed and put the future of your cannabis business at risk. So while failure is the one thing that a lot of cannabis businesses try to avoid, prevention and mitigation is easy if cannabis business owners had the foresight to prepare and develop a good strategy before setting up their business and while operating their business. You can reach your full potential if you know and understand and apply these concepts. If you commit yourself to understanding these facts, you'll be creating the best scenario for success of your cannabis business. And if you want to learn more about anything I talked about in today's video, check out my website at www.thegreenleafcpa.com. There's a wealth of resources there just for you. And if you've enjoyed today's episode, please give us a like. And if you'd like to see more, hit that subscribe button and click the bell. And if there is something that you're stuck on in your cannabis business, go ahead and drop a comment down below. I get back to every one of them personally. Now, we drop new episodes each week, so I hope that you'll join us again. Thanks so much.